Wanted to first of all introduce my colleague Marcus, who you can see on your screen. Marcus is one of our senior customer success managers here at Swoop for Advisors. So if we work with you, you'll be seeing a lot of Marcus. You'll be working with him very regularly in a lot of depth, and he's fantastic at spotting opportunities for clients and thinking about how we can integrate what we do into your firm, make it work with your existing processes, your existing tech stacks, and your existing priorities as well to solve those pain points that you might have. I am Ryan. You can see Ryan Bucock on the screen there. My role is business development for the platform. So I have the privilege of speaking to most of you in the first instance at shows like the Digital Accountancy Show, which we were at last week. Some of you might have been there. And in conversations that I have with accountants every day, bookkeepers and FDs as well. So getting to know you and getting to think about your priorities and your clients is my bread and butter. That's exactly what we do. So today, Marcus and I wanted to take you through what we've obviously called client funding, the final piece in your advisory puzzle. And the idea behind that is, I guess that, in this kind of new world of advisory services and funding services that you can offer clients, there may be other things that you're already offering in the world of advisory, things like cash flow, forecasting, things like budgeting, things like management accounting. And this we think is a really good way going through Swoop for Advisors of bringing salience to all of those things, making those work together, making a really cohesive advisory platform or package, if you like, that you can present to clients with our help as your one-stop shop for funding. So on the agenda today, we will essentially be going through the why, the what, and the how. How do we work for you and your clients? How do we work for your firm? And why add funding to your existing services already?
Excellent. Well, I can jump in from that point and just pick up the sort of why, and just set the scene a little bit. So there's definitely I suppose, panning out a little bit from the advisory piece. I think that the good place for us to start is why it's important for clients and there's SMEs that we're helping out, why these sort of services are important. And there's loads of challenges that I'm sure that you're seeing or clients are telling you about when it comes to just generally running their business, whether it be about getting paid on time. There's always stats and studies out about how late businesses are getting paid and how much money is sitting in limbo that really should be in the hands of the SME. Things like rising costs, there's definitely pockets of industries that are being hit a lot by this, whether it be construction, whether it be recruitment, or whatever that might be. Whether you're a niche business in certain industries or have a certain concentration of clients, you're probably seeing a lot more of this than some. But that is definitely impacting the growth of many companies, and obviously making them definitely grow at a much slower pace. The banks as well. There's definitely a lack of support from banks. You may have seen this, some more so in certain banks. You've got people like Starling out there that are definitely top of the leaderboard when it comes to customer service. But having that sort of relationship lending support is definitely pulled back a lot, particularly from the businesses that turn over, say, 3-4 million pounds. I know from when I worked at NatWest, we would sit down with the accountant and the business owner and walk through what their plans are, where they're up to as a business, and then whatever the most appropriate form of lending, where that's appropriate, might fit. And now we aren't really having that conversation anymore from a bank manager, which has really opened a bit of a void for accountants to step into, as bit of like a relationship lending, relationship finance function to help those businesses navigate what is a very complicated lending market. And then finally, again, just on that topic, access to funding is a huge barrier for businesses. Yes, there's things like Google. Yes, there's a few comparison sites out there, but there are a number of lenders across the UK that only work through particular brokers. Now, the reason for that is purely on a cost to serve and cost to acquisition side of things. Naturally, for some of the legacy banks and bits out there, they only want to lend to larger companies due to the costs involved in lending, due to the way that they work. Whereas some lenders aren't out there pumping marketing budgets in the same way the likes of Funding Circle would do with their leaflet drop once you incorporate a company, and depend on people like brokers to structure the deal, package it in the right way, so it flies through their internal underwriting model. So I just want to set the scene there a little bit on the SME side, as what the challenges are and sort of why you might want to start solving some of those. But we're definitely not unaware of the challenges that you have as an accountant. And there are lots. We don't disagree with the fact you lack a huge amount of time. And that's probably a bit of the tip of the iceberg. And I think under that falls a range of other areas that as to what's feeding to that lack of time. That's a mixture of resourcing. So whether it be internal staff or looking at other alternatives in the market, I think there's a lot of conversation now about how to get more skilled members of staff in, how to stimulate the kind of grassroots. And that's definitely on top of people like ICAW's mind to get new accountants into this space as well as just hiring for perhaps new roles that accountants haven't done in the past, whether it be more sales or more client-focused roles in the business too. Pricing is a key part as well. Margins are always getting squeezed with the competition in the market about winning new clients. So there's absolutely a focus on how I can drive more revenue from additional services so I don't become a bit of a price war in that compliance land. We can touch a little bit on that. Education development, so upskilling of team members. COVID doesn't help with that. Typically, the traditional way of upskilling members of the team is through the powers of osmosis, bringing them into client meetings with you, overhearing things in the office. And unfortunately, that just isn't doing as well, at least in the traditional sense, as it is sort of post-COVID. We're having to adapt. And I think there's obviously better ways of getting that training out there, but getting different ways to expose your team members to business challenges and how that then feeds into your core offering is a great way to fast track some of that. And then finally, access to products. You're absolutely not a brokerage, and to manage so many lenders and so many partners in one place is a challenge. So bundling all that stuff together, yes, you might want to help the SME, but you absolutely do have those hurdles to overcome as well. You've got a little screenshot there from Spotlight Reporting that highlights some of those. That's just a bit of a slight bit of a plug for Spotlight. They do an amazing global advisory report, which touches on some of the challenges that are being faced, but also some of the opportunities that are being put out there too. And that's at a global level. So it's nice to see how peers, not just in the UK, but across the globe, are facing very similar problems. But on the opportunity, sorry, Ryan.
Sorry there, Marcus, go on.
No, if you got
All right. I'm just going to jump in there, actually, because we've prepared a bit of a poll question here that's essentially based on these criteria on the left there, just to think, what are your biggest challenges? What are the biggest barriers basically preventing you from doing more, from doing the work you want to do in funding and advisory for your clients? Obviously, the Spotlight research is fantastic, and when you've got the slides later, you won't have to be straining your eyes looking at that. But we thought it'd be good to get going with just a couple of brief suggestions from that and see what your takeaways really are, see what your challenges are at the moment. So if you're happy to fill that in, it'd be fantastic to get a bit of insights into how you're thinking and what your challenges are, as I said.
Amazing. Thanks, Ryan. Yeah, like I say, it'd be good to see that. We see that at a very high level, but the people that we're speaking to and the conversations we'll be having, I'm sure, after this webinar today definitely helps us focus on your immediate challenges and how we can help and share best practices from other firms as well. But on a slightly more positive note, there's lots of opportunity out there. And I think there's a huge focus now about, say, growing that fee income from not just from your typical compliance and traditional kind of offerings, but also how you can enhance that through what's deemed as that very broad term, which is advisory. So in terms of opportunities, again, from our friends over at Spotlight, got a bit of insight in terms of some of the key areas that firms are looking to focus on in terms of fee growth. There's a lot of conversation now about virtual CFO and that fully outsourced finance function, which is a key part of kind of bringing a lot of that insight in-house for you to be able to deliver a much more of a holistic service for your clients before it becomes, I suppose, a bit more suitable for them to have some sort of internal members of staff as well. That then opens up conversations about a range of other services that you can then offer. So a bit of strategic planning, whether that be based on pricing or industry-specific direction that you can provide. Forecasting and cash flow, which is definitely a challenging area to always get clients buy-in. But if you're able to kind of storytell that and explain the benefits of forecasting and cash flow, it's a great way for clients to see a bit further the next month, which creates a bit more of a broader story to be able to tell and understand what the next sort of 2, 3, 4 years might look like based on previous data. Tech assistance. Now, clients aren't blind to the fact there's lots of automation, AI, wherever that might fit in your firm. I think it's also important that we meet those expectations from clients. They're hearing lots of amazing things from the likes of Dext or any other sort of receipt capture out there, all the way through to automating your accounts payable function. So what the perception is then is what you're going to do with that extra time that you've then freed up. And the insights you can then pull from that information to then play back to clients as well. And then finally, the place that we sit in quite comfortably is around capital and debt raising. There's a range of sort of solutions to those sort of problems, but capital and debt is quite a key one, particularly through COVID, when many businesses have borrowed for the first time ever. I think it's important now that we give those businesses a little bit of direction about what the rest of the market looks like. For those regular borrowers, making sure that they understand that there are over 300 UK lenders for businesses. And for those non-borrowers, it's making sure we understand why they're not borrowing. Maybe they don't need to, and that's absolutely fine. or if they've tried and failed and there's something beneath the bonnet there we can help them with to unlock a few more options for growth. So looping back into Swoop, what I'll do is I'll hand quickly over to Ryan to give us a little bit of an overview of what we do here, then I'll pick it up very shortly for the rest.
Thanks, Marcus. It's a big question. I think the first thing probably is to give just a little bit of context, I guess, whether you maybe met us at the Digital Accountancy Show last week, or you might have heard us in an ICAW webinar or known of us previously, or maybe this is the first time that you've heard anything from us. Swoop itself was founded 6 years ago by two former KPMG accountants. So specifically to fill in that void left by the bank manager relationships, which have sort of largely died a death, and specifically focus on SMEs. Now, Marcus, I think, pointed out kind of the real criteria there, which is these are businesses that are hungry to grow, they've got ambition, but they're owner managed. They don't necessarily have their own in-house FDs, their own full-time finance department. So it's really you guys that are able to provide the best possible guidance for them in lieu of any other support like that. And that's basically what makes you guys, and I'm going to use the word rock stars unashamedly. I know it's cliched, but I do like it, and it is true. So thinking about really the broad spectrum of everything that Swoop offers, our aim is to basically be a one-stop shop for funding. So essentially, think of us as the extension of your firm, almost like your in-house funding team here. So if you'd be working with Marcus a lot, you'd be working with the success team and the funding team in turn. But really, what it boils down to is being able to give you and your clients access to the world of funding, so that there's only one website, there's only one number, there's only one email address that you need to know. So we look at funding almost like the four legs of a stool. Another cliche, I'm sorry. If we're just looking at loans or we're just looking at equity, that's fantastic. That might be what a business needs now, but it might not be the whole package that's going to support them in the longer term. So we like to think about loans, grants, savings, and equity as being part of a balanced equation here that's sustainable, that can allow you to give your client support year round and whatever stage of the business development they're actually at. And at whatever stage in the future they want to get to, there'll always be something that you can do to give them extra value. Two of the best ways to start talking about funding with clients, if these are not for conversations that you already have with them, maybe because they don't expect you to, or because it just hasn't come up, but two of the best ways to start these conversations are on things like grants and savings. Comes as no surprise that businesses tend to, their interest tends to be piqued and their ears prick up a little bit at the mention of things like grants, for example, because in so many cases it is quite literally free money. Now, we've got a fantastic grant finder tool on the platform that you'll have access to, that you can run any client through, that works on the basis of location and sector. I had a little check last week. As of then, there were 542 grants on the platform, which makes it by far the most comprehensive grant finder tool in the UK, to the extent where NatWest and Lloyds actually white label it, interestingly enough. On there, you'll find, as you can see, national, regional, innovation grants, competition grants. We even have access to European grants because we are an Irish company at heart. We still have an office in Dublin to that effect. A question there from Denny. Marcus, you want to take an answer at that?
Yep, absolutely. So the question was, do you assist clients with the grant application or just simply identify what they could consider? So the answer is both. So partly is the I suppose aggregation of all those grants into one place, which is a little bit of a pain. Otherwise, you've got to sign to every newsletter and bits to kind of collate that information. And for those ones where it isn't a very binary criteria, so the local, regional, national kind of Gov UK type grants are usually very binary in terms of what they're looking for. There's a very clear application process that tends to need the client to kind of self-complete. There's not a lot of value we can actually provide to that. Where we add the most value, I think, aside from the matching or identifying the grant options, is around the larger, more competition funds, which Ryan briefly touched on there. So the Innovate UK, the Horizon Fund, those where it's a bit more of a broader mission statement, and it takes a little bit of an art to put together that grant paper to apply for that. So we've got a panel of grant writers here at Swoop, some that are very well known, like Granted Consultancy, and a number of other more niche ones that specialize in particular industries, just to increase the chance of success with that. And we'll tailor the pricing based on the complexity of it, but also the client's competence. Some businesses have done grants in the past and they've got a bit of an idea of what note needs to be hit. Whereas the other businesses out there, maybe it's their first time applying for one of these grants and really need to be kind of handheld throughout that process. And actually the pricing will be tailored based on that. I hope that answers that question for you there, Denny.
And what I would sort of add to that is that those grant writers are really good at giving you some indication right off the bat as to whether an application A or B or C is going to have a reasonable chance of going through. If they don't think so, they'll tell you up front, because the last thing they want to do is spend 2 weeks on an application that isn't going to come through. So it's always worth asking the question. And I think one of them actually works on a no-win, no-fee basis. So definitely worth having a chat about that. I'll say as well, I should have said at the top, if anybody does have any other questions, do put them into the chat and we'll get to them as we go along. I'm also going to challenge Marcus with a couple of questions that we often get towards the end, just to put him on the spot and see how we get on there. But absolutely, if you've got any questions on grants or anything else, do let us know. The savings piece as well, incredibly useful. Some of these things can be really quick, if you like, sort of low-hanging fruit things that we can turn around quite quickly for clients. If we're thinking about a client that maybe works in retail or manufacturing or hospitality or the care sector, they might be paying, frankly, through the nose for their energy bills, and that's limiting their cash flow. It's limiting their access to lending in terms of what they can get, in terms of what it's going to cost them. And it's basically putting a bit of a cap on their ambitions. Even something as simple as that, we can usually find between about a 10 or 30% saving on an energy bill. And if they're coming towards the end of the contract, that's something that can be turned around in a matter of days. That's something we can be really proactive about as well. All we need is a utility statement, for example. We can also facilitate business insurance, pensions, credit scoring and improvement, deposit savings accounts, high interest savings accounts that are getting between 4.25% and 5.25% with instant access at the moment through one of our partners. Really popular products. And I guess that sort of takes the word savings on its head, and we're not looking at cash flow savings here so much as savings accounts for cash deposits, but it's absolutely worth taking a look at as well. We've got a fantastic equity team here as well, who work with around 300 different investors, mostly looking at SES and EIS opportunities, I should say. So if you do have clients who have those ambitions to get to the next level, and maybe they're sort of post-seed and they're looking for Series A funding, always worth a conversation there. You can even upload pitch decks to the platform. It's very quick, very straightforward. They get reviewed twice a week. We give you an answer on that, and then we can take it forward. We can even give clients access to a pitch deck builder. So if they don't already have one ready, we can help them get there. And then, of course, we get to the debt side. This is in some ways our bread and butter. We tend to think of this as a very balanced equation, but we still get a lot of, probably the majority of calls about debt, relatively unsurprisingly. We work across essentially the whole of the UK market in the UK. So that's about 300 lenders. So all of the big banks, niche lenders, alternative lenders, sort of quite techie lenders, storybook lenders. There's a horse for every course really there, essentially. And we can work across everything you can see there and more. One of those lenders even works in something so specific as legal disbursement funding. So if you have a client that is objectively fundable and it's a good business and it's a good case, what we say is we can find them funding, whether it's things for cash flow like asset finance, machines or vehicles, invoice finance or factoring, trade, HMRC funding, or more run-of-the-mill things like secured or unsecured loans, or we could look at commercial mortgages. You get the picture. It goes on and on and on. But we can help put together a plan with you that's going to be the best combination and the best balance of these things in the best order at the best time for your clients as well. One thing I did miss off as well, we also handle R&D tax credit applications. We do that in-house. We have a wonderful expert here who is both an accountant and a lawyer. So you can always have a very granular conversation with Sahil on that, and we can take that process from start to finish and keep you in the loop the entire time. I will point out a couple of our team here. This is the advisor team. We sit within the larger Swoop funding business, almost as our own separate business within a business that essentially leverages the entire offering from the rest of the team. So obviously you'll recognize one or two of those faces there from Marcus and myself. Annie, Marcus's colleague, is our other superstar success manager there. And you might recognize Sam Tasker in the middle from his ventures on LinkedIn, or possibly the ICAW webinar, which he was on last week as well, or various other places as well. Now, our job is to basically work for you. So this is the team that becomes your team here at Swoop. So every question you have on funding or on implementation, you can come to us for that. I'll just show you a couple of these faces. Now, some of these might be familiar to you. I think we've got like Complete HQ and Lara Manton from LJN, Venture, Finance Management, and KBG Accountants, which we've done a lot of work for here. Really broad spread from relatively small bookkeeping practices up to multi-office firms, those with different priorities. Venture is very sort of focused on things like corporate finance, whereas James Lizars from Thrive, who you can see in the top left, takes a really sort of broad, holistic view with his clients, and we've been able to do so much work with him. Actually, the commission that James gets from the successfully funded deals that we do ultimately goes to planting a Swoop forest, which I rather like. Now, anything to do with commissions, we do have signed off by the ICAW. We can give you letters of engagement to that effect. So it's yours to do with what you like. But I rather like the fact that he uses it specifically for something sustainable like that as well. Now, some of these firms, I think Complete HQ right in the middle is a very good example of this, came to us wanting to do more in the way of advisory and funding work, but a little poor on the resource really internally in terms of time and in terms of the level of education and training that the staff had, and slightly unsure as to whether it's going to be something that would fit their client base. Here we are, sometime later, I think at least a year later, we do something with them, at least one or two things probably every month. And that might be small things that add value, but it's things that help them get their clients to the next level. And we give them a lot in the way of staff training. So all of their team know how to have the most basic conversations on funding with clients. They don't need to be experts. Nobody's expecting that. But we've essentially helped them empower their team to free up some of that time as well at the kind of director, at the partner level, which is obviously the most valuable in terms of billable hours, and brought some of that work into the rest of the team and given them insights into how to reach out to their clients. And what they thought was a client base that may not be ready for it turns out to be one that is absolutely engaged and quite excited to be working with them on funding. So how do we do it? Thank you very much. We are platform based in the first instance. So we like to think of the platform and the people being two halves really of what matters here. The platform is what does the heavier lifting, and it's the human touch, it's the relationships and the expertise that really make it valuable. So once you have access to the platform, it's very simple. You can give accounts to the team, so everyone can upload their own clients. You just saw on the previous slide basically the level of information that we need to get going, which is quite straightforward. Company name, if they're a limited company, we get public information from Companies House, a general indication of turnover and what their expectation is in terms of funding and what type of funding they're looking for. And from that, the platform, as we say, does the heavy lifting and shrink wraps all of those 550 odd grants and 300 odd lenders, et cetera, into what it thinks in the first instance that client might be eligible for. Now, at this point, it's relatively indicative. So we always recommend having a conversation with the funding managers from this point to see what exactly, when we drill down, is going to be best for the client. And once we have more information, we can obviously come back with more precise results. But this is going to give you a really quick answer to be able to take back to a client. So when they say, can you help me with this? Or is there a grant out that for this? Or would I be eligible for this? You can go on this, and within 2 minutes, you can give them the answer. So it's very, very simple and intuitive to use, and you can keep track of the entire process on here as well. There's no soft search or hard search of any kind when it comes to credit that goes on here. The data stays exactly where it is until the moment you say otherwise. So there is no reason at all, not frankly, to put your entire client base on, at least in batches, and just see what they might be eligible for. So as much as yourselves too, as your own firms. One option that we can do to give, I guess, a bit of power back to the clients themselves is go down a white label route. Now, some of you might be familiar with Gravitate. They do an awful lot on LinkedIn. So if you follow the industry on there, you've probably seen them pop up. We started working with them in the last year on the basis of a white label version of the platform, which is something that we could do for anybody. Essentially, we redesigned the platform, your colors and branding. It then lives on your website as it does here on Gravitate. You can see they've got their finance tab on their website there. So they then, with our marketing and education support, are in a position to direct clients to that portal so they can make the initial application. Now, this has a couple of benefits. One, it gives the client the power. It gives them essentially the access to make the inquiry that they might not get around to asking you about. But it also means that you have a way here of pre-qualifying the ones that you want to work with very closely and the ones that you're happy to just go through the portal there. Again, thinking about that idea of directors' time and team time and the opportunity cost of doing this, this will allow that initial filter, if you like, so you can see what's going to be a legitimate case and what might be one for later. The advantage of this as well, most of the firms we work with who do go down the white label route, and Gravitate are included in this as well, is actually using this again with the marketing support and their own marketing and maybe SEO and things like that, although that's getting a little far down the rabbit hole sometimes, to direct potential clients to this. So the white label can be a very good way actually of generating new clients, and new clients in the context of funding, clients that are looking for funding and with whom you can have this conversation with from the very beginning without ever needing actually to bring up the topic of funding with them, because it's one of the reasons they came to you in the first place. So it's a fantastic way of building up a rapport with them, of giving them access to something very useful and valuable in the first instance, and then building on that relationship and making them part of your client base.
Excellent. So I'll pick up here on in terms of the support. That's where what we do a lot of on the success side. So we've gone through the products, so you've got an idea of what we cover off in terms of the different solutions. You've seen some of the friendlier faces in the team that can help support with that, and just a little deep dive in terms of what we do. What we don't want to have is just in access to products and you not know how to spot the opportunity or how to have the conversation or how it can then complement your core offering within the firm. So we have a customer success team. That isn't just a fancy name for an account manager. It's really to help you navigate and get the most out of the partnership with Swoop. One, making sure you get breadth of option and breadth of products that are implemented with the client. So it isn't just about funding. You can also look at energy savings and bits as well. And we can help with email templates and other different ways that can help streamline some of those processes. We've also got a range of masterclasses that can help you leverage your team for these conversations too. One of the good things about the breadth that we offer, as Ryan rightly mentioned earlier on, is that there's different levels of complexity with the different products that we do have. So if you are on a bit of a mission to get some maybe more technical or more junior members of staff, having slightly more conversations about just the business rather than just the preparing the information, this is a great way to start to add this into their day-to-day conversations. So we've got those masterclasses, some of them at the top, so the first 6 are going to be around the products, a little bit of a deep dive in terms of all the different kind of subsets of lending and all the different case studies and bits we've done in the past to help you and your team associate what we do here with your client base. And at the bottom, we've got a little bit of marketing, which is really about client communications and how best to get this in front of your client's eyes. And then finally, processes. And as Ryan mentioned previously, it's about how we can then start to bed it into your day-to-day. So it's a couple of good examples around that is that perhaps you're having a conversation about things like capital allowances as part of the client's tax strategy, and then being able to source the equipment for them as well in terms of arranging the finance for that. Or even something even more simpler of looking at something like a VAT liability and giving the client a third payment option. Looking at the pay with your own cash, we can look at a time to pay, which you may or may not charge for. Or the third option is they can spread it over a 3-month period with a short-term VAT loan. So it's not to push the client in any particular direction, but I think the challenge that a lot of SMEs have, as we saw earlier in the slides, is just understanding you don't know what you don't know, and access to breadth of options is really important. Then we've got things like pricing and process. The process I just kind of touched on, but really that's where we kind of understand where from the point of onboarding or maybe some agenda points at a pre or post year end conversation, where this can start to complement the conversations you're already having with clients. Pricing. So we can touch on it a bit in shortly, but really it's about how you should be charging for this service to your clients, whether it's built into your current monthly pricing, whether it's a standalone cost that you do, and a number of firms that will have a funding application fee at the start. Two benefits of that. One, obviously, it stops you depending on just the success of the deal, but also it trims away those tire clickers that we don't want wasting your time and reckoning that unchargeable time as you have conversations about this. But also how it can then complement other services that you do from a pricing perspective or upsell perspective. And then finally, as I mentioned, marketing. In addition to the masterclass, we also have a great marketing hub. Actually recently gone live, so we're announcing the kind of latest state of that at the moment, which basically houses all of our content and blog copy in there for you, email templates, just to help fast track some of that communications out to clients. So you can crib bits out of that, use the whole thing, whatever you like, just to kind of help you, I suppose, reduce the time that you need to spend creating blog content, other bits that will help funnel clients or just alert them of these new services that you can now offer. Just wanted to show a few friendly faces as well. It's not always that obvious, but we are a relatively large team. We've got over 30 different funding managers here across property, asset, unsecured, as Ryan pointed out. And we've got a number of team leaders here that will support with that, and very well versed in these areas. So we've got Tom Fludgate, is incredibly passionate about asset. Butterworth on the equity and grant side. We love a Tom here. We've got a trio at the top. And we've got Tom Hawley, who works very closely with our lenders from an unsecured and working capital perspective. And then finally, Ed there at the bottom for the commercial property, and sits above a team of very experienced ex-bank members of staff there to help navigate some of the complexities around portfolio lending, or whether it is just to buy a single trading premises.
Other Toms are available, I will say.
Absolutely. I think we've got them all. So if you can find any more, let us know. So finally, we've got a bit of a Q&A. So if there are any questions, please do pop them in there. We've got one earlier on from Denny. So any further questions you do have, let us know. If you are watching the recording of this, by all means, reach out to Ryan or myself for any questions. But Ryan, you said you had a potential few there to quiz me with.
I did. I've been a little bit mean here, and I haven't shared these with Marcus in advance. But I thought we'd just maybe address three of the big questions that we often hear from firms that are looking to, I guess, grow out the offering they already have, or embark upon a brand new advisory and funding offering as well. And one of the things that comes up, Marcus, what are my responsibilities as a firm when it comes to my clients, when it comes to ethics, when it comes to regulation? What's my responsibility here?
Yeah, sure. So in the first instance, I think I'll definitely push you back to your kind of regulatory body, really, to work out what their guidance is. Now, a lot of them are very similar. I think the ICAEW and ACCA are probably the ones that talk about this the most. And it's really about you demonstrating impartiality with the partners that you do use. So an intermediary makes that a little bit easier because you aren't directing them to a specific lender to suggest that this is the best option for yourself. But also it's about the engagement part as well. They put some guidance around. ICAEW do is quite a bit of detail about the level of engagement you need to go through to let the client know that you do receive a commission or a revenue share as part of this. This is purely a reward for the service, and it's not going to incentivize your direction as part of that. And there's tons of engagement letter templates either that we can share or that on ICAEW's website that will help with that. But it's really about, I suppose, touching on the kind of data protection, making sure the client's aware of any sharing of details that's typically covered in privacy policy, worth making sure that's nice and tidy. Then it's about engagement with the client, making sure the engagement's quite clear for these services and that you are receiving those commissions. And then when you do receive them, just be clear and transparent about what's been received. So on that part, we've got one here from Denny actually. So for savings assessments, what sort of information would be provided? Are fees here based on savings achieved? So we can go on to more specifics, I think, in terms of all the products, but from a savings, for like an energy savings, for example, they have the way that it works. They'll get the client basically sends a utility bill through to us, and we'll share that with our partner. They'll come back with a report to basically show how much more or how much less the client will pay if they went to a different provider, and they'll get all that priced up. We can only do it if it's within a 12-month window of the renewal date. Otherwise, it makes it quite hard to price that accurately anyway. Then if the client was to proceed, what happens with that is that they factor in pretty much like a penny per kilowatt on the usage, which is what that provider then takes as their income, and we can then get a portion of that, of which we share with yourselves. So the client will still receive that discount, but it's just a slight margin put on top as part of that, rather than charging upfront fees or success fees based on the amount that's saved. It's just a slight margin on on the kilowatt percentage. But if you've got any questions on the other little bits, whether it be insurance or deposit savings as well, I can give you a call afterwards so we can walk that through.
And I think you might have just partially at least answered this question, Marcus. But again, I'm occupying the role of an accounting firm owner here, and I'm thinking, this sounds good. I can see how this could be relevant to some of my clients. I could see how this might, I guess, evolve into a genuine service offering. And I want to be able to give them the right direction. I want to give them value. Fundamentally, though, mine is a business as well. How do I make sure that I can find a return on this investment? How can I make this commercial? How can I make this a sustainable offering that I can keep giving to my clients?
Yeah, it's a good question. I think there's, like I say, it's key. No, we aren't, and I'm sure, and accounting firms aren't, we're not a charity, and we do have to make sure we commercialize this and also get a return for the value that you're giving in those conversations as well. That's really important. There's a lot of conversation now about, if you listen to any of James Ashford stuff, about making sure you price that value into whatever you're charging clients. I think that's really important. If you are offering set value above statutory compliance, again, it's making sure you price that in line with the benefit the client's getting. So it's typically 3 or 4 ways that most of our firms would see like an ROI on working with Swoop. The first one is the revenue share, as I touched upon. So anything we earn from any of our partners by way of referral fee or commission, you'll receive a portion of that, and that depends on which plan you go ahead with. But it's typically between sort of 20 and 30% that you'll get a revenue share from that. That can go some way to do it, but naturally that's a success only way of receiving the money. So if there are cases that aren't successful, and there will be, we're dependent on the lending market, and some clients just aren't lendable in their current state, is that I would encourage you to explore, which is the second one, around charging upfront fees or charging a fee as part of that service, whether that is a standalone funding application, or you can start to productize some of these services we do offer into a quarterly or half yearly or annual health check. There's a fee associated to that. That can also be blended into your monthly fees too, if you work on a monthly recurring fee model. That's a great way for you to bundle that in. I think because of the perceived and actually real value as part of that, taking away all that time and research needed for the client to go off and research different insurers, different energy providers, different deposit account providers, you're saving them a lot of time, and it's worth you obviously charging for that as well. So it's the commission part, it's the upfront fees. The third part is how you then cross-sell to other services. That tends to be a great way that some of the larger firms use things like funding or grants to open up a conversation about whether it's grants, identifying what innovative activities a client's up to, and whether that might apply to things like R&D, tax relief, whether it's, as I mentioned earlier, about capital allowances, whether you can start that conversation, start to tack on things like funding as part of that, which makes you and gives you the idea of sort of robust services as well. So they can complement it very well. And then finally, and Ryan did touch on it briefly earlier, actually, on the white label offering, is attracting new clients into the practice too. Now, if you are lucky to get referrals from clients, then that's absolutely fantastic. But the chance of you winning the client over purely based on your kind of core accounting services has a certain level of likelihood. Now, the more value you can add on that, and the more hooks or conversation hooks you can get in the conversation with them about saving them money, looking at grants, it's just going to add more probability of likelihood of them going, actually, this is more of a business advisor than my traditional accountant that I'm currently using. And keep that conversation open till the time is ready for you to engage for the accountancy side. So these are all great ways to start conversations with clients as well. So those 4 ways, I think, are the key ones.
And I think there was just another question for us from Denny there, Marcus, just on
yeah. So it's what if we have clients who might be eligible for grants but are unaware of these? Would there be a scope to check client bases against funding opportunities to make them aware rather than necessarily be involved at the point of funding? Is a bottleneck. So I need you to just reword that just so I get that bit. In terms of the clients that may be eligible for grants, I think it's the best way of doing that is through the platform as Ryan mentioned, whether that be through the backend portal, the kind of self-support portal that you have, or the client-facing one. The challenge with grants is that we would love to be able to match them to the exact grant that your client is after, but a lot of them are either project-based or due to specific strategies in the business around sustainability or innovation or employment. So we try and match it as much as we can do based on the client industry and trading location. And then from there, as you saw on the prior screens, we tend to give you a list of between 10 and 15 different grants across the UK. where there's a high likelihood that your client would sit in one of those areas. So some of them are quite generic, like the Help to Grow scheme, where it's a very kind of broad industry coverage, or some are very specific around sort of farming in the Southwest, for example, or innovation around the kind of Freeport and bits around Teesside, or wherever that might be across the UK. There's pockets of those areas that are wanting to be stimulated. So I'm not entirely sure that answered that question in its entirety, but I'm happy to pick up Denny after this just to clarify that a bit more.
I should say as well, if you did want to get in touch with either of us on any of this, because neither of us are called Tom, we've got very straightforward email addresses. So ryan@swoopfunding.com and marcus@swoopfunding.com. Now, we'll be reaching out to you in the next few days anyway, so you will hear from us. But just so you know in advance, you can contact us that way, or obviously on LinkedIn, or any way you like that way. My last question to you, Marcus.
Yeah.
We've talked about a lot here. We've covered a lot. We've talked about loans, grants. We've talked about savings. We've talked about equity, a whole host of support. And again, I'm slipping back into character here. My time is limited, my resource is limited, and I've got other priorities and other fish to fry. How do I get going? Where do I start to make this effective right from the get-go? What's the first step for me?
Yeah, sure. And I think part of that is understanding your business. I think we'll do that typically as part of the onboarding calls and bits that we have with firms to understand whether you've got a particular niche or what your client base is looking like. But a really good place for you to start, just at a high level, to work out what the addressable market might look like for these services, more so for the funding side, but it applies to others too, is to probably segment your clients. And I briefly mentioned it earlier in terms of those borrowers, those regular borrowers who have overdrafts, credit cards, maybe a little bit of borrowing from CBILS, or even before that, maybe they've got a bit of higher purchase for vans and bits that they've got. And then non-borrowers, because the borrowers really, they've got you, they understand the concept of lending. They're probably using a slightly narrow range of products and a narrow range of lenders. So it's important that we give them breadth of option, particularly where the base rate is a lot higher than what we've been used to for quite some time. Price is a really key part of that, but also things like flexibility, and also what their long-term plans are, whether they want some sort of relationship with that lender. We can put them in the right touch, put them in touch with the right lenders there. On the non-borrower side, that's probably broken into two areas. So those are the businesses that just don't need to borrow, and that's absolutely fine, or the ones that do need to borrow and found it quite hard. And that could be things from support you can provide around, maybe they haven't increased their prices in the last few years, which they're leaving money on the table from affordability perspective. Maybe we can save them money to make them a bit more funding eligible. Or maybe it's a credit improvement conversation about how we can make them look better in the eyes of their suppliers and lenders too. So there's a few different ways we can tackle that, but that's a great way for you to look at perhaps a high level without going too deep into the client base in terms of sectors, about which of my current borrowers, which of my non-borrowers, and where you can maybe perhaps start those conversations.
Wonderful. Well, I think that gives me somewhere to start. Now, back out of character. I wanted to say again, thank you to everybody who has joined us today. That is almost everything from us. If you have any last minute questions, do get them in the chat now. Or again, you can reach out to us or wait for us to reach out to you, whichever is going to work best for you there. We've spoken really quite generally here about, I guess, Firm X. And we haven't really drilled down into what we might do for very specific types of firm, whether you're an FD or a bookkeeper or multi-office firm, or you're a sole practitioner, or you've got 8 partners. If you want to have a little bit of a think about what we can do that's going to work for your business in particular, let's have a conversation with myself or with Marcus or someone else from our team as well here, and we can think about exactly what that's going to look like for you and put things into more specific terms. But it'd be really exciting to get a bit of a feel for what your priorities are again. And to that effect, I wondered, Laura, who is the wizard in the background managing all of this, if we had any results from our earlier poll that we can share. Interesting. So pricing and education and development are coming out here as the main priorities so far. Well, Marcus has delved a little bit into how we can help you price for some of this, whether it's the commission generating side or whether it's looking at fees and retention and referral, that side. And I think we've gone into some of the education and development as well. So hopefully a little bit about what we've talked about has addressed some of those things there. But naturally, it'd be very good to get into these again, as we say, with you in another conversation in the next days or weeks. So let us know, and we can tackle those things head on and see what we can do to help you. In the meantime, thank you very much from myself. And Marcus, if you had any parting words for us.
No, thank you very much for turning up. I'm conscious it's that event season now for all accountants and bookkeepers, so I appreciate you passing the time with us, ready for Accountex in a couple of weeks. Thank you.
Fantastic. Well, we might see you there, but otherwise enjoy the rest of your lunchtime, and we'll speak soon.
Thanks, everyone.